Hey guys, Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that help me build up a sizable portfolio in about 2 years and now manage that portfolio. Today, y'all, I want to talk about a quote I heard from Warren Buffett. And he talked about the stock market and how stocks couldn't care less who owns them or what price you paid for them. And it really is truly applicable to real estate. And especially in times like now where rents are kind of stagnant, there's a lot of inventory coming online and things like that. So stick around if you guys want to hear about that. In the meantime, yes, I did get a new little backdrop here. This big rear end calendar. It's kind of interesting, kind of cool to lay everything out. That's free advertising for them. This is the only wall I could find it. Anywho, if you guys enjoy this stuff, like, subscribe, share it below. We appreciate that. It helps us out. Definitely enjoy getting the comments about how this stuff has helped y'all. So let's get into it. Warren Buffett, that old investor guy, he said, a stock doesn't care what you paid. It doesn't even care you own it. So I heard this, and of course, obviously, people buy a stock and they think, or invest in the market and they think, oh my God, I paid this. Now it's going up and going down and it just needs to go up a little bit more. When it goes down to this price, I'll sell it. Or if it goes up to this price, I'll sell it. That stock has absolutely no idea and no care in the world that you own it at all. And this could not be more applicable to real estate. Some of y'all have bought a home in the last year and a half. And at the time of this recording, in the end of 2024, rates are somewhere between 6.5% and 8% on a 30-year fixed mortgage. If you bought that same house 3 years ago or 4 years ago, you probably got a 2 to 3% interest rate, definitely a sub 4, and your mortgage payment might be 30, 40, 50% less than what it is today, especially since taxes and insurance have continued to rise. So do you think the tenants or the general market cares what your mortgage is? Do you think the general market thinks, you guys now got a 8% mortgage on that, the new buyers, or maybe you transfer the property or did a cash out refi. Now your mortgage went up 30%. Do you think the market cares at all? The market couldn't care less who owns that home. The tenants just need a safe, affordable, properly managed home. They don't care if you own it, if your neighbor owns it, if it's managed by yourself, if it's managed by a management company. All they care about is it safe? Is it going to be properly managed? And can I live here for however long they need to? So this is just so applicable to what we see now. And especially, like I said, at least in Houston, in the greater Houston market, rents are stagnating. We're seeing a lot of inventory come online, multifamily supply, a lot of people turning their properties into rentals to hold in their cheap mortgages still, that lock-in effect, as they call it. So this is creating more inventory, more obviously supply and demand. More supply puts pressure, downward pressure, all else being the same on prices. So the people renting your properties today don't care that your taxes went up 20%. Your insurance costs went up 20%. Your mortgage might have increased exponentially because you did something, like I said. So keep that in mind, y'all. Don't get too anchored in what financing was 3, 4, 5 years ago. We might never see, I say never. It might take decades to see 3 to 4% mortgages again. It might happen in 5 or 10 years, maybe. But with the way things are going, it's very unlikely that we're going to see that anytime soon. So do not beat yourself up about that. And anchor yourselves in today's environment is today's environment. The tenants, the buyers, if you're looking to sell, this is same applicable rules. They do not care what you paid for the property, how much you had to invest into it, how many repairs, maintenance, and things. They don't care what that cost. They want the end product, the end result. They don't care what your financing is. And again, they just need a place to live. So keep that in the back of your mind, y'all. I don't know how many times I've heard it, and maybe you have said it. I have said it once before, many times before, actually. Well, My mortgage is $1,500 a month. So I need this to rent at $2,000 to pay the management fee, to do all the other little maintenance and repairs so that I can make a couple $100 a month. Market doesn't care. What the rent is what the rent is. What the market will bear is what the market will bear. So be cognizant of that over this next 6, 12, 18-month cycle that we're going in. We don't know. I personally, and I'm not a prediction wizard by any stretch of the imagination, but I can tell you right now, the trends and the pressures or the drivers in the rental market are not driving rental prices up. All those pressures are putting downward pressure on rents, not upward pressure. So, and you're getting it both ways because you have the increases in taxes and insurance that's eating into your cash flow as well. So in 12 months, when you're doing a lease renewal and you're upset because your mortgage has gone up and your taxes and insurance have gone up and you need that property to go up in value, just remember that property does not care what you paid for it, how much money you put into it. That tenant doesn't care if you own it, if you got a 2 or 3% mortgage or an 8% mortgage. Nobody cares but you. And I get it. Like I'm all for my cash flow has been getting compressed as well with all you. So I don't mean that I don't care about, owners' cash flow concerns, because obviously if you don't have any cash flow, you're going to sell the property and we're quickly out of business. So I totally understand that. I'm just saying we have to be mindful when we're setting rent prices, and especially if you're a self-manager. And if you're going to, what is my mortgage? That's how I'm going to base my rent price. I need to make $400 above my mortgage. That is a wrong way to do it. You need to go to the market, see what the market will bear. And if you got a mortgage at $600 and the market's going to bear $2,000, awesome. If you got a mortgage at $1,600, the market is still going to bear that $2,000 a month rent, all else being equal. So, y'all, I don't want to be a Debbie Downer, but just please, please, please don't forget, a stock, a rental property doesn't care. A tenant doesn't care what you paid for the property, doesn't even know you own it or somebody else owns it. They just need a safe place to live, to rent. So I hope that was helpful. Again, I don't mean to be a Debbie Downer. I appreciate you guys, but I'm here to give you my honest opinion on things, or my honest assessment of what I'm seeing in the general market, and to help you become a better investor and help you steer yourself around these murky and sometimes treacherous waters. Okay, y'all. Appreciate you guys. See you next week.